Good afternoon, everybody. Welcome to Trader Merlin Show. Hope you had a great trading session out there, especially coming off the heels of last night. We had such a bullish day yesterday, and then all of a sudden, future session gapped up and looking absolutely fantastic in the after hours yesterday. And today, we continue on with that. So, it was funny, Margaret. Did you know what was going on? Margaret says, check your internet speed. It's funny, literally right as the show started, it says I lost internet connection here today. So, hopefully it will run well. I did do a speed test, and we're looking really good, about 380K up and down. So we should be good for today. Now, I guess the big looming question on all of my trader friends' minds is, what the hell's going on? Why are we seeing these big up days, big down days? Look, you have pressure from the European Union. You saw Germany say today, as well as France, saying, look, any prolonged tariff war is going to cause a lot of problems for the global community. And having international leaders and politicians say that is putting a bit more pressure on Trump to maybe resolve some of this. And I think that's where we ended up with today was not necessarily an about face. The media called it an about face, and I don't believe we're looking at an about face. I believe it's a loosening of your rhetoric. And I've talked about this before where Trump has a good propensity for shock and awe, right? It's just hard lows. I'm going to beat you to pulp and we're going to get in a big fight. And then all of a sudden it's like, you know what? Can we just shake hands and say we fought? That's kind of what's going on here. So I thought I would have some fun with the graphics today. I've got the let's make a deal. Now we know that Trump wants to make a deal, obviously one that's going to be best for him and the United States. But I wanted to create a graphic here, and I'm going to apologize up front because I know some of you are going to get bent out of shape on this one, but I had to because I just thought it was kind of funny. I said, show me Trump with a big snicker on his face. I wanted him to be winking, but I feel like this is kind of like behind closed doors. This is what Trump's doing right now. He's just kind of got a smirk on his face. He's going, just kidding. Yeah, it's okay. We'll all be fine. And I know it totally looks like Carrot Top, doesn't it, Sub? I can't go into Mid-Journey. And type in President Trump or President, anything. I can't do anything like that. So I have to I said, show me a U.S. politician with red flowing hair, and this is as close as I could get to Trump. So when you guys see me have a picture of Trump, I can't ask that of AI. It just kind of organically happens that way. So anyway, I'm sure that this wasn't his intention to pull just kidding, but it is interesting to see this about face because two things came out today, which we talked about on yesterday's show as being the catalyst. Number one was potentially backpedaling a little bit with China today, as well as Jerome Powell. So the tariff war isn't a just kidding thing, right? That's a serious one, and I think that ultimately we'll get some resolution. But if you have this one, Jerome Powell, we talked about this one repeatedly over the past couple weeks. This poor guy is being pushed around, and it's like, look, I got a dual mandate. I have two things I'm supposed to do, man. I'm responsible for full employment, and I'm responsible for stable prices. And you can pressure me all you want, but I'm not going to cave, and I'm not going to resign. I'm not going to quit. And today, you heard President Trump say at a press conference, look, I have no intention of firing him, which I think all of you would, or most of you would agree. A couple days ago, it's like on Friday, it kind of sounded like that was it. Like, I am going to fire him. I want him out. He's not doing his job. He's a loser. I mean, come on. You can't call someone who's so, I would say, well-respected in the global community. I think Jerome Powell has a pretty good level of respect around the world. He's got a very difficult job. And then just be outright calling the guy a loser, I thought that was pretty lowbrow and amateur. But now all of a sudden, everything's fine. He's got no intention. He'll just throw insults at him every now and again. So what does this do to you and me? It takes that variable off the table. I mentioned this on Friday's show. Did I do a Friday show? I don't think I did. I can't remember. I may have, was he on and off? Yeah, exactly. No, it's just on and off. However, he said that publicly that he is, it was Good Friday. So on Thursday's show, I mentioned that, if he does decide to press and fire Powell, really bad for the markets. And I think that could cause a big decline in the market simply because it would create such upheaval and just would not be good for the markets. This comment today was that relief rally. And if you look at the charts today, I think a lot of you are enjoying this one. Now, granted, we did get a nice move up, but it started to drift back lower. So here is your big rally up. And I did see, I think that was it Steve that said earlier? Yeah, Steve says kind of like, wait, no, you didn't say, I think you did say earlier, Steve. You said shooting star, there you go. Steve Wolf says, the Russell, the YM shooting stars on the daily. Yeah, and you could look here at the S&P futures, and you could argue that's a shooting star. Here's your Russell, shooting star. Here's your NASDAQ. I mean, it's not quite a shooting star just because the green candle's too big on today's action. But, if you're trading market momentum, you're expecting it to stall, this NASDAQ, if you will, as we get closer to this 19,200 mark. And we kind of tailed up in that area today. S&P 500, similar situation. I mean, I've had this line drawn here for weeks. This is not a new line at 5,500 on the S&P. And today, we came right up to 54.99.75. 25, a quarter of a tick away from the S&P hitting that number. And then we started to sell off from there. So I did not capture any of the short opportunity. I've been way too busy building content for the past several days. But great opportunity here for shorts coming into overhead supply. I mean, this is why you look for supply and demand zones to create those kind of high probability entries. Even though things look so rosy, supply came into play there. And you saw a big down move back on April 10th from that level as well, implying that there still is some supply left at that zone. Now, of course, if we get above that, then I think we'll close this gap that goes all the way back to April 2nd, probably fairly quickly, but we've got to get above that first, and that could be a problem. Lee says, 29 people here, only 7 likes. Well, we would like more likes. We would like more likes. It's likes are good. I think that does help the algorithm the more we get likes. Likes and subscribers has begun. Exactly, one tick. Right, 25 basis points at a tick. Let's see, we got 4 ticks to a point. GC is interesting chart. We'll get to that one as well. We talked about that as being a short opportunity if we got below specific levels, and we did. So, as far as market momentum, look, we've alleviated one problem, which is Jerome Powell, and as I think some of you mentioned, this will probably come back in another couple of days, right? It seems like Trump will go on a spree of, hey, things are okay, we're going to have peaceful trade tariffs. No, I wasn't going to fire Powell. And in a couple of days or a week down the road, it's, we're raising tariffs on China, Powell's got to go, I'm going to fire him. That this shock and awe will probably continue, which I had an illustration yesterday of a roller coaster, and I think that we're going to see more of that, right? More just extreme volatility going on in our marketplace. So as difficult as it may be to navigate that type of market, the shorter-term swings are good. Now, for me, I didn't do any short-term trades today. I've still got those positions, a decent-sized position, MicroStrategy, some SMCI, and then the bigger one right now is NVIDIA, a pretty big position in NVIDIA that will hopefully expire here on Friday. 2 more days. Marcus says they should have a love button. Wouldn't that be nice? Wouldn't that little love button? They used to have a thumbs down or like a dislike button, but now I can't see the results of that one. Do you know any great traders who are killing it with this volatility? Margaret, I don't. And main reason is I don't talk to a lot of traders as I used to. Back when Trading Academy had our 150 instructors, I was much more active. I do know a lot of people that are doing well, but I don't really talk to a lot of day traders personally anymore. I got a few friends, but a lot of people have gone to work for different companies, and because of that, we've kind of lost touch, lost relations. But yeah, I don't have anybody in mind other than myself that's doing pretty well in this market. Of course, I don't ask. I don't ask traders that. It's not a question I will ever ask you. It was like, hey, what are your trading results for the week or month? It's none of my business unless people want to volunteer that one too. Gilbert says, doing well trading options? Yeah. I'm doing well trading equities, options, futures, and I'm just holding crypto and adding to my positions. But the options have been great. The premium lately has been very high. Getting, what did I get on NVIDIA? Well, we'll see what happens. I opened up a big position on Monday on that down move, and it looks like I'll get probably 1.8% rate of return for 4 days on NVIDIA, selling those $93 strikes, or $93 puts. So, yeah, that's pretty good rate of return. If you can pull down 2% a week, you're looking at, 104% rate of return. If you compound that, it's probably close to about 115, 120% rate of return per year. So, yeah, it's been pretty good right now. Our Wall Street trading decks are doing well. Yeah, when we looked at the earnings announcements, well, we didn't look at them here, but as the earnings announcements came out for, your Goldman Sachs and JP Morgan's, the numbers that were really outstanding there was trading volume, really doing well for them. Exactly, Steve. And we just got to be careful with that. Sometimes those premiums get a little too exciting and enticing, like they are with things like MicroStrategy or SMCI, which is the ones I've been playing and getting some pretty high rates of return. And just the danger is you could get stuck with some of them. MTV says, I'm learning to sell covered calls on my metals and selling puts on things I'd like to own. Yeah, I mean, that's a majority, I would say now, of my trades have migrated over towards that. I feel it's just easier. It's a simple process. I don't like to make it complex. I know many traders in here are using like iron condors and spreads and strangles and butterflies. That's not really for me. I think I'm a little bit simpler. I think the wheel strategy fits my personality type better now that I'm older and more, I don't know, just discipline, I guess. So, yeah, good for you. Let's see, what do we got? His tweeting makes it hard to hold any futures positions. Stephen, I would definitely agree with that. And let's take a peek at that and kind of say, as far as futures positions, ultimately what I'm referencing is the trend and where things are going. If we look at this picture here, we've had 2 great trading days in a row, although even though the end of the day today, the S&P showed us a 1.64% gain. Keep in mind that a lot of that happened on the rollover. So we jumped up 1.19% on the rollover contract on the S&P. At one point today, we were up 3.48%. We gave back 50% of our daily gains today. So it still looks great on paper because everyone's like, oh, great, 1.64% up. Yeah, good bullish day. However, I would contend that this graphic right here actually shows you a negative picture. It looks great because on the hard right side of my screen here, you see the numbers. It's positive 1.64% for the S&P, but that candle's negative. And the way that I would approach this, and my viewers that follow me regularly know this, for those of you who are new, with a shooting star, which is what we have, I'll make this let's get rid of this line and we'll change that to a green line. How about that? Just so I can, now I have to figure out what color is green. Great. I don't know what color is green. Being colorblind is not good. I think that's green. We'll leave it there. Okay, so your green line up here, which is right now at 5,377 3/4, that is your low for today's trading session. It's the absolute low for today's trading session. So the way that I trade shooting stars, and this is, again, this is not a you have to do it this way. I'm hoping that the regulars understand that the reason I'm always showing you this is I have rules for myself. And these rules have been established because of years of trading, years of practice, and what works best for me. And I'll explain why I've chosen that specific strategy. And here's the main reason. Tomorrow, if we go to another market, the candle's going to look different. But let's say tomorrow we gap down. There are traders that will short that simply because it gapped down and it's following through to the downside. Well, I've seen it all too often where it gaps down below that line and then just rallies right back up and takes you out. And it's like, oh, dang it. Why? Well, for me, it has to open up somewhere. Let me take that out. It has to open up somewhere in that yellow box. Anywhere above the low for today. Okay, so what I'm anticipating is we'll probably get an open up here on the S&P a little bit higher. And then once it breaks down below that green line, that's your short entry point. Here's the tricky part with futures, though. We have that quasi 24-hour market for futures. For me, my rule is generally it's got to happen during regular market hours. So at 2 a.m. California time, if it breaks down below that little green line on the screen, that's not the trigger for me. That's not the trigger for me. Yeah, I would. September's fine. This is the continuous contract I've got here, but we can bring up the specifics if you want. September. September is fine. With this, again, you have to follow those rules because if it gaps down, it's just missing a parameter for me, and I've seen it too often where it rallies back up. If it opens up above it and rips back down, that's your opportunity to go short on this one tomorrow. And of course, yes, use your front month contract or the current contract. So this looks great from a short perspective. So does, let's bring up our Dow Jones. Here's your Dow Jones, which looks even better because it's a red candle near the bottom of it. And it's the same basic principle. I'd be looking at the different levels and saying the low of today is my line. That's at 39,487. And that's the short opportunity. Now, it changes a little bit when you go to other markets like here's your SPY. That's not quite a shooting star, right? It's just the body on today's SPY is too big. It's too big of a red candle. Does that mean it's invalid? The answer is no. All right, I would still offer the same thought, which is if it breaks the low of today, which is 533.88, if it breaks down below that, there's your short opportunity for the SPY. And of course, we could go to triple Qs. You got a similar picture, and I'll just put lines right across those because these could be great short opportunities for tomorrow. That on the triple Qs is 452.88. You got the diamonds, which is even better because it's closer to the low. That's at 394.90. And then we'll do IWM, just so we can have the Russell in there, which is a really bad one. But all these indexes have the same picture. They showed a great gain. But as I've mentioned before, if in an argument between two people, the most important word is the last word in the argument. And on all of these charts, all of them, the S&P, I'll do the ETF. So here's the Russell, big red candle. NASDAQ 100, big red candle. Well, red candle. SPY, red candle. And we also have a diamonds, big red candle. So this does look like it's setting up for a pretty big sell-off, not big sell-off, but at least a down move today or tomorrow. My guess is probably tomorrow because we have all this positive sentiment. And really nothing has changed fundamentally other than the rhetoric from Scott Bessent, who is the Secretary of the Treasury, as well as the President, talking a little bit of a lighter stance with regards to tariffs for China. My guess is next week will be full board tariffs again and maybe even raise tariffs. Who knows what the heck happens? But I think, at least from my perspective, I'm approaching these markets from okay, I've got a couple days of bullish moves. I'm going to have a couple days of bearish moves. And just these big swings, and hopefully I can capitalize more on those. So I've got some positions open right now that I'm optimistic will close below my strike prices. Again, I've got the 352.50s on MicroStrategy, which, I mean, we were actually above that today. We hit a high price today on MicroStrategy of 355.83. Is actually in the after hours we got there and opened up pretty much on our dead highs, which was great. And then, of course, NVIDIA is the largest one I have right now, but I have the $93 strikes and the 100s. A bulk of it is at the 93, so I think I'm okay there going into Friday. But we could certainly retrace that. As you can see here on NVIDIA, we've got a lot of big gaps there. You look at things like MSTR. Really, this is more about Bitcoin, which was your best performing of our top 8 today. And I'll dive into that here in just a second. But let's go back to our comments and questions and see what I've missed here. It's a view of market volatility. Anyone read the book, Trading the Zone? Yeah. Trading in the Zone and The Disciplined Trader are probably two of my favorite psychology books on trading and investing. Still, my number one book is Reminiscences of a Stock Operator, just because it's a story. The psychology stuff is fine. I think we all have to figure out what our own psychology is, but reading those books is pretty good. Steven says, it's been hard for Bessent. He says one thing and Trump says something completely different. Yeah. Steven, it's funny because it's like you've got J.D. Vance, you've got Trump, you've got Bessent. You don't really have a vocal chairman of the SEC right now because that's in a transition phase. But then you had Elon Musk, who is still making comments. His comments today about tariffs, I think, were very interesting, which were, he's all about free trade. The lower the tariffs, the better it's going to be for global trade. And I agree with Musk on that one. He also did say at the press conference the conference call for Tesla's earnings that he was going to take a significant step back in that Doge role, which I think that's part of the reason we saw Tesla start to have a much better day today. We closed at 250 on Tesla, coming off the heels of those really bad earnings. We watched this last night as it happened. Is that a red candle yet? So we opened up 7% on the day, a gap up. Ultimately finishing just up 5.37, but we are currently up a little bit in the after-hour session. So all in all, impressive day for Tesla on the heels of what I thought were just terrible earnings. But you never know. You never know how it all pans out in the end. Ultimately, this is why I don't really like trading earnings announcements, because on paper, looking at those numbers for Tesla, I would have thought we'd be down 10, 15, maybe 20%. That's how bad those numbers were. But then again, we're already down 50%. Too many different messages out there, and don't expect that to change anytime soon, Steven. Big Ev says, bad cop, worst cop. Yeah. Sometimes it feels like it's like a Three Stooges episode, right? You're like, nya, 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 whoa, 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 boink. You know, all the little comical sounds could be done, but whatever it is, it's great in volatility. Today was a very welcome day for me. You know, this I positioned myself incorrectly on the April 2nd announcement. So if we go back to the SPY, I actually, when he came out and he had his tariff talk on the lawn of the Rose Garden, I positioned myself bullishly, and I got smoked right away. That was bad. It was a bad 3-day run for me. And now, not only have I recouped every penny of it, but I'm actually well above where I was on April 2nd. That's the beauty of positioning and taking advantage of these market volatility. So, Margaret, do I practice in front of a mirror? No, I guess I was an only child, so I used to spend a lot of time alone. So I used to do a lot more impersonations, but then I realized that I can make an impersonation of somebody and someone will get bent out of shape and offended by it. Like I did in my XLT general session. I mean, literally a guy sent in a letter complaining to Trading Academy that I was impersonating Trump, and I was like, okay, I'm having fun. It's an impersonation. And honestly, my impersonation I thought was pretty spot on because it was all about bonds. And so if those of you who weren't in the XLT general session, here's the impersonation that I gave. It was an impersonation of President Trump mocking Jerome Powell, because Jerome Powell is with the dual mandate, right? He's got this dual mandate he's supposed to stick with, which is full employment and keep inflation under control. And Trump's been saying, you need to lower rates. I want you to cut rates. You know, no one knows more about bonds than I do. I know so much about bonds. You have to lower rates. That's all I did. No one knows more about bonds than I do, which I think you'd all agree. He says that a lot about different things. Like, he'll literally be sitting there with Neil deGrasse Tyson. He'd be like, you know, Neil, it's really interesting as you say that, but no one knows more about astrophysics and the geothermal climate control aspects of volcanoes than I do. It's like, wait, you don't know anything about that. That's it. Call the Academy, Big M. It's all right. I think that the Academy is not going to fire me because, again, I can mock him a little bit, but honestly, he's still my president, and I'm still going to be trading whatever information is coming out that way. So that's right, Stephen. They do say impersonation is the biggest form of flattery. I wasn't trying to embarrass Trump at all or make him look like an idiot, but I just do like who he says. No one knows more about something than I do. He says that a lot, and it cracks me up. I'm like, you've got to be the smartest man on the planet. Forget Nikola Tesla or Einstein. You got it. All right, let's go through our top 8 here. Obviously, because this risk on, be careful with your throat when you do. Oh boy, I don't even want to know that one, Andres. Your risk on, risk off environment. We talked about the kind of bearish candle we had, and I mentioned in yesterday's session that this was not a shooting star. However, we did draw this blue line on here, which was similar to what we looked at just moments ago, talking about breaking the lows of the previous day's trading. This was probably one of the more predictable moves to happen. We knew that gold has just been on an absolute tear because of people fearful about tariffs and unknown about the markets. An 18% move in gold in 10 days is ridiculous. This is not Bitcoin, folks. This is gold. So when it stalled out yesterday, we drew that blue line, which you can go back to the show yesterday. It was at 33.79. And based off that, my same rules apply. You would not have gone short on the open because it opened down below that blue line. However, it did drift back up. All right, so let me show you that here. I'm zooming out. So there is when we rolled over yesterday afternoon, right around 3 o'clock, when we rallied back up and came back down below it. Really, I guess technically your entry would have been right around 6:30 p.m. Pacific time. That was your entry point. So that wouldn't have worked for me because I just don't like the liquidity in the after-hours session. So unfortunately, this would have been a non-event for me. But for those of you following the rules, that would have been a great shorting opportunity, and you had a great sell-off there in gold over the next, for today's session. So similar picture to what we saw today with the shooting stars. Tomorrow may be a great day for everybody. I got a friend coming into town, so I'm getting the house ready, and then I'm going up to the Fish concerts for 3 days. So it's going to be a little bit tough, but I may actually be right there on the open tomorrow looking for shorting opportunities, just scalping some futures trades for the short term because those markets looking pretty weak. SPY, right? I love it. We've had a nice big pop off of mediocre news. Same thing with the NASDAQ 100. There's your triple Q. So let's go to crude oil, down 2.2%. There's always this talk, which is almost as volatile as a Trump press conference, where one day crude oil demand is surging, and then the next it's, tariffs and trade disputes could cause problems for oil going forward, and demand's going to drop, and China's dropping demand. Today, the talk track was concerns about demand dropping for crude oil, and therefore we got this chart. Technically, though, there's nothing here that says I'm either bullish or bearish. I would say, as I did yesterday, that I'm slightly bullish just because the trend over the past 2 weeks has been slightly to the upside. But other than that, no, I don't really have any strong feelings about crude oil, which I'm sure some of you are long in. Margaret says, silver still going strong. Let's go to my metals tab and check out silver. Since you threw it in the mix, let's go check out the OSI. Looking very good. Not as good as gold, right? Not as good as gold, but certainly having a much better pop. And I think that part of the reason you're seeing this pop is the expectations that trade wars and industrial stuff will start to come back. That we'll see more manufacturing, and that certainly benefits silver. So, yeah, we were down at a low price here on April 7th of $27, and here we are at 33. That's a pretty substantial move for silver in a short window of time. We're looking at, from peak to trough here, 22% gain in 11 trading sessions. That's great. Fantastic move. Steven says, Merlin, is gold to buy at 32.50 area on the 2-hour chart? Is that too high up? Let's go look at that gold futures chart again. Here's the BTC. Oops, that's not gold. That's GC. I guess I need to get some of these lines off my screen. I got too many lines going on here. We already had that bullish flag formation. I'll get that out of the way, and we've used that short as our entry. So you asked if 32.50. Let me put a line on that exact number here. Okay, so there's your 32.50. And the reason that you're doing that is because as you look across here, you'll see that that is a demand zone, right? It's a point where we had an aggressive turn before. That's where actually we drew our bullish flag from. I had too much coffee today. That's where we drew our bullish flag from. So this zone between 32.08 and 32.46 becomes the most logical point. And I do think, Stephen, that that's probably a good point to buy into this. But remember, you have to have a belief. It's not just technically that this is a pullback. And I would say it's surface value. If you strip out the symbol here and just, this could be any chart, right? Doesn't matter what the symbol is. If I have a chart that looks like this, then yes, I am inclined to think that that demand zone between 32.08 and 32.46 is a good one, right? You were in an uptrend, you're going to have pullbacks to demand, and then the trend should continue. The fundamentals here shift a little bit with gold. If you're bullish on it, you have to believe that this tension and stress and uncertainty is not done. So if you believe that Trump's going to get back on this tariff horse and start raising tariffs, or that things are going to escalate and there's going to be more problems there, or that China continues to unload bonds and causes upheaval in our bond market, that uncertainty should drive gold even higher. If you believe that we are now turning the corner and we're on a peaceful slope here, then I would say don't buy there, right? Because if you're buying a demand on gold, you're expecting more uncertainty. If all of a sudden we come to a day of peace with tariffs, and Trump says, hey, we've signed a unilateral agreement with the entire world, 20% across the board for every country, and we've all signed off on it, let's all hold hands, sing kumbaya, the market's going to frigging rip from there, right? And that means money's going to surge out of gold. They'll be going into the equity markets because that uncertainty has been removed. So that's how I would look at it, Stephen. And that's just my perspective. But if you're buying long gold, you still have to have that chip on your shoulder of uncertainty is still there and is going to be persistent. The longer that persists, the better gold is going to do. That big episode, that'd be way too easy, wouldn't it? And yeah, it would be way too easy, but stranger things have happened. As long as we come to some agreement with these countries and it's now certain and definitive and Trump can sign it, because let's be honest, Trump's being the bully, right? I'm not looking at Xi Jinping. I'm not looking at, Japan or Russia or Brazil and saying, oh, you guys are bullying us. We're being the bullies here, and rightfully so. I think we certainly have been treated unfairly on the global stage. However, once Trump signs off and says, we're done with that, trade wharfs are all solid, we're ripping. We're going to rip. I think it will be a big rip to the upside. So, good. Great questions. Yeah, you guys are funny. I have a half brother. Margaret. Mason is my half brother. Mason. And it's funny, I rarely talk to my brother. We have talked sparingly over the years. And he reached out the other day and he wants me to teach him trading. There we go. I might get him on the trading chain. He's only 30. How old is he? He'll be 34 this year. My younger brother, significantly younger brother, is 34 and just starting to learn about money. So all right, I'll help him out. Buy 6-month calls. Michael, you could do that. I think that I'll be honest, it's too much uncertainty for me to commit to anything for 6 months right now in the stock market or any financial market. The only thing that I'm committing to for 6 months is Bitcoin and crypto. And after 6 months, that may change, right? I do expect there to be a rally. We saw some nice life in that today, which we'll bring up that chart here in a minute. But to say where I think the S&P or NASDAQ or Dow or Russell or gold are going to be in 6 months, I mean, I can come up with a hypothesis, but as you've all experienced and most likely would agree, it can change like that. Snap the fingers and all of a sudden everything is changing. I mean, it's nuts how quickly it changes. So I don't know if I would personally want to lock myself into 6-month calls or puts or even going into leaps for longer term. I'm not comfortable personally with that, but certainly it is an option for you guys to do. Yeah. Thanks, John. He does. He's just never asked. I volunteered in the past, but now he all of a sudden is, so it's good. Yeah. Teach a man to fish, Stephen. It's funny. I've been teaching more of my close friends this stuff, and it's nice to see it making a change in their lives where they can, start thinking about how do I position myself financially? How do I grow my net worth? The tough part is, I think many of you probably understand this, is you've got to downplay the media hype in trading. Meaning, I have to go out there and I have to convince my brother that, look, you're not going to take your $50,000 and turn that into $1 million by the end of the year, right? I go, you want to set a realistic expectation? What's 8% of 50,000? Okay, well, that's $4,000. All right, you should make, on average, $4,000 per year if you're staying with market averages. Now, of course, our goal is to beat that. But even there, I have to convince people, you have to understand that if this market drops 20% this year and you made nothing, you won. Huge, right? That means you save yourself 20% drawdown in your account. All things considered, my account would have to move up 40% to get back to break even. So if I lose nothing when the market drops 20%, I mean, I'm popping bottles of Dom Perignon celebrating. It's yeah. Now, if I can get positive rates of return when the markets tank, I'm hoping this is one of those years. There's a lot of people who are down big on the year already. I'm having a great year, right? And if I can have positive numbers when the markets decline, the impact that has on your overall compounding rate of return over the course of your trading career in life is astronomical. We've digressed here in our conversation, but I think it's really important. Let's bring up SPY, for example. If you look back at a monthly chart of the S&P 500, this is the part that just kills me about this. You look back here to those big drops we had. If you bought $100,000 worth of the S&P in, let's say, 2020, you had to wait 8 years to get back, or 7 years to get back to break even. Just break even. You literally had to wait 13 years. It went all the way to 2013 for you to start to make a profit. So, my opinion, buy and hold is a dead animal. At a minimum, if someone was holding SPY all that time and just selling calls against it, it would have lessened the damage. You would actually had a rate of return over those 13 years. But, so many people get destroyed by these drops. And, you look at this chart, it's I certainly think there's one coming. We're in the midst of a fairly decent pullback now in the markets. We were down 20% at one point. I'm hoping that most of you are not down 20%. I'd love it if all of you were up positive. Even if you're up 2% for the year, you should just be going, yeah, I'm up on this year, man. That's a good goal to have. So, in the last year, actually the last couple of years, and I'll walk you through my trades, there was what year are we in? 2024. In 2023, I did not beat the rate of return for the S&P 500 on my combined accounts, and that was frustrating, right? That's frustrating. But I'll make up for it more than tenfold if this year has a big down year and I have a positive year. So we'll look at that towards the end of the year when we get there. Knock on wood, not to sound cocky, but we're setting up. So far, it's been a great year. The volatility has been very kind to me, and we'll see what that is at the end of the year. Let's see. Do you think NVIDIA has lowered the bar already by acknowledging chip restrictions and they have a great earnings announcement? I think, well, again, we have time for that announcement, Dwight. NVIDIA's the real ones we got to watch out for. Okay, so I'm not skipping your question, Dwight. I'll get to it here in just a second. But let's talk about the important stuff. Google's tomorrow, right? Let me go back to a daily here. Apologize for keep switching charts. Google is tomorrow. And Google does not look good right now, but tomorrow is a big statement. The question will be their advertising revenue, their talks about being broken apart or having their browser taken away, right? Having Chrome as a separate company, and some of their advertising monopoly stuff that the San Francisco courts are going after them for. So they've got some obstacles. We'll see if their ad revenue is dropped. But remember, Google is one of the heavy hitters on most of the indexes. Then you look next week, you've got the big daddy Microsoft, which also looks pretty bad, right? So you've got, good for you, Garfield, a 3.3% when the S&P 500 is, as of right now, it's down 12. You've got a net delta of 15% in your favor. That is awesome, right? Now think about it. If the market's closed right here for the year and you were up 3.3% for the year, as a number, I think a lot of you would probably go, that 3.3 is not great. If the market's down 12, you're kicking booty, right? Yeah, absolutely. Positive year. This is part of my trading plan. So I told you guys before, part of my trading plan it used to be, in the early days, I had percentage goals. Like, okay, I want to get 40% rate of return this year, 50%. And there was one year where it's like, I wanted a 48% rate of return, and I got like a 38. And I was frustrated with myself because I didn't beat my goal. And I was like, you still beat the markets. You're beating all the average. That's great. So I stopped putting a percentage goal. My goal is to beat the market, right? That's pretty much it. My goal is to beat the market. And if you have positive returns so far this year, you guys are off to a great start. Great start. Keep it up. So we got Microsoft, which you just mentioned. That's going to be next MSFT. That's next week. You've also got Apple's next week. So a lot of the big heavy hitters are next week. That's important. But then we look at NVIDIA. So NVIDIA, we've got a couple of weeks. That's going to be on the 28th of May. So you got a while till we get there. So it's a little bit off of the normal path. Most of the Magnificent Sevens will have already reported. Now, if we look at where NVIDIA is today, it's taken a pretty big dive, right? It's down presently 31% off its high. So it's doing worse than some of our Magnificent Seven stocks. The question from Dwight, which is a great one, do I think that they've already lowered the bar by acknowledging chip restrictions and will have a great earnings announcement? I don't believe so. And that's, again, it's just my belief. My belief is that they're going to lower their forecast, and that could be detrimental. So I think we have two things here. I think the numbers reported by NVIDIA are going to be, wow, like just astronomical numbers. Phenomenal, showing incredible growth continuing for NVIDIA. I think that they're going to come out of their press conference and talk about the significant impact of tariffs, of chip restrictions, of the different issues that are facing them with regards to international trade, supply chain disruption potentials, and things like that, that could threaten their business. And I think that might damage their market. So I'm still bullish long-term on NVIDIA, but I think, again, the longer this goes on and the more uncertainty we have with China and Taiwan and tariffs, it's going to be a much worse situation for them. So hopefully get resolved before the 28th, right? So at the press conference, they can say, okay, now that we have this behind us, things look great. That's my perspective, Dwight. I'm sure everyone here has a different opinion on it, but I do like the fact that it's down 31%, which is, again, why I've been selling puts on it fairly aggressively at that 93 mark. I did sell some at the 100 as well, but 93 is where I really went maybe a little bit too aggressive, but it's okay. I have 40 contracts at 93. So I was a little aggressive, but the rate of return was pretty good. Like I said, it was 1.8% rate of return for just this week. And we'll see what happens by Friday. I mean, honestly, I kind of hope it would drop to, get down to 90, 94. Let me sell some 90s next week and let me execute on my 100s. That's fine with me. Is the worst of the market drop over? Oh, man. is the worst over? Considering we're down 20%, or we were down 20%, I would say yes, but it's not done, right? So the big decline, I think the big chunk of it's out of the way, which is kind of why I drew this picture. I think the worst of it's over, but I do think we're going down more. So let me show you the S&P here, which I've drawn out. I think I did it on the SPX. So I drew this picture a while back, and this is kind of what I think is going to happen, right? I think we're going to chop sideways for the next few months, but I do think that by the time we get into July and August, the economic data is going to start to reflect the impacts of the tariffs, which means I think we'll see inflation surging up a little bit. I think we're going to see unemployment numbers drop. I think we'll see business spending decline a little bit unless we resolve this immediately. If this drags on another couple of months, then I think the chart's going to start to look like this, and the damage that's going to be done from the unemployment and inflation is going to take a bit longer to get out of, and therefore I think we'll drift lower. Now, we've already seen on the S&P from the peak to its low point was 21, almost 22% slide. Now, this is a loose interpretation, but I have it towards the end of the year looking like we might be down roughly 26%. So yeah, I think the big shock factors past us, but I think that there's going to be a general kind of concern about the impact of all of this, which takes many months to filter through to the economic data. And I think the data is going to reflect that third and fourth quarters of this year. And a correction, the lowest lows usually get tested at least twice. Yeah. And that's kind of what that picture I have here. You notice that I have showing a bounce again somewhere in June, bounce up a little bit. My guess is they'll probably cut rates to save us. And then the market will just kind of go into bearish mode, just like it did back in 2007. And again, please don't take that as, oh, Merlin, I'm loading the boat or shorting the whole heck of the market. You got to do your own thing and come up with your thoughts on where you think things are going to go. This to me is just going off of historical models. And I know that Big Eb's going to tell me, whoa, Merlin, what you saw back in 2008 with the financial crisis is completely different than what we are seeing right now. And you're totally right. You're absolutely right on that. So, as they say in Southeast Asia, same but different. So I'm going off of historical precedent, but I could be totally wrong. The key here for me is I want to make sure that if I have a plan in place, I got stop losses and protect myself along the way. Thoughts on OPEC dumping excess oil reserves in the near future? I didn't know that they were dumping their oil reserves. I know that OPEC is just a great manipulator of oil prices, and honestly, VB, I haven't looked into that one too much, so I need to research that before I can make a comment. Otherwise, I'll just be talking out of my backside on that one. So I still owe you a beer, so I have to get it to my consolation prize. Big Ev is with interest now. We're up to at least 2 beers. All right, so Gilbert's up 2.6. Good. And it's interesting because on a normal year, let's say we are January, February, March, April, right? So you're 4 months in, you annualize that. That means that theoretically, if you're up roughly 3%, because I'm averaging Garfield's and Gilbert's numbers, average 3%, you're looking at about 12% rate of return. If you can continue making that, which by itself, you're beating the historical numbers for the S&P. But if we have a 20 or 30% down year for the S&P and you're up 12, man, you should throw yourself a party, a big one. Big party. All right, let me keep moving up here because I want to get through some other topics. We talked about the crude oil. We didn't talk about the 10-year. I'm still very, confused is be the right word. What's going on with this 10-year? My gut tells me we should be seeing yields drop because the Treasury Department wants that, as well as the president, and they could put some pressure to make that happen. However, you have these external variables of other countries selling our bonds and other factors causing this to just remain very, very volatile. So I don't know where we're going from here. I really don't. It kind of feel like if the trade war continues, China will continue to sell bonds as well as maybe some other countries, and we could see these yields continue to increase. If it calms and we come to some resolution, then maybe this will change and we'll see this start to drift lower. So I'm not hanging my hat on this thing going either direction. Right now you can tell just over the past 2 weeks, lots of chop, right? Lots of chop. That dollar index, though, great rally for 2 days off the demand zone we had drawn in. Remember that 100 mark should act as a supply zone. So my guess is we'll probably stall tonight into tomorrow, right at this 100 mark. We did hit it today. The actual intraday high was 99.939 And that 100 psychological number is right there, which is area of supply before. So there's all good reason why we should stop. Let me just get the zone drawn properly here. If I'm going to go off a traditional zone, that should be right about there. Okay, so we are literally right in the middle of that supply zone. And based off the previous trend, which has been in place for the past few months, that would lead me to believe that this dollar index is probably going to start to sell off over the next couple of days. If that dollar index does sell off, that could mean more upside movement for the S&P 500. Yay! And lastly, we have B to the friggin' C today. Bitcoin. Boy, you have a spinning top formation today on the Bitcoin futures. 94,325 is where we were at. We talked about the momentum if we broke above this 89,000 mark and made some new highs. We also talked about rallying up to this last area where it sold off aggressively from, which is 95,000. Now my guess is we'll probably see this sell off for a day or two, and then the real discussion is, do we continue, right? Obviously, I am optimistic. Maybe it's I have to use the hope word. I'm hopefully optimistic that this gets some legs underneath it and we keep on trending, and this whole trend gets reversed, and boom, we'll find ourselves back, 108, 109,000 in another couple weeks. That would be ideal, and then all of a sudden momentum piles back in. There's a guy named Jack Mallers. So Jack Mallers is one of these, he's an orange-pilled young guy, and that orange pill means he's all about Bitcoin, and he's starting a company backed by Cantor Fitzgerald. Remember, Cantor Fitzgerald, one of their bigwigs, is now on the president's committee over there. He's president's committee. He's it's looking good. So Cantor Fitzgerald is now backing this Bitcoin. It's a SPAC that's going to I think it's called 21 Coins. It's all about Bitcoin and maximizing growth using Bitcoin. Not like Michael Saylor in particular. That's certainly one aspect of it, to be buying and hoarding Bitcoin, but investing in companies that are doing Bitcoin development and things like that. So that'll be one I'll tell you more about when I get more details on it, but that's something to keep an eye on, because you're getting more and more interest in Bitcoin. And I think that kind of demand is going to cause this chart to go up much higher. And as Margaret says, that trend line's broke. So we've got, not only is it outside of this kind of channel, not really a channel, but it did make broke a pivot high, which is great, pivot high. And now it's broken that trend line as well. So this is very good news, although I do expect a little bit of a retest, maybe coming back down to 89. And then ideally, we get the liftoff. Is Bitcoin still set to hit 250,000 this year? Well, Robert, I certainly hope so. But remember, I've told you guys before, hope is the most vile, disgusting, foul four-letter word that you can use in trading. Yeah, the F word is not even close to being as bad as hope. If you say hope, it implies you've got no clue, you're just guessing, it's not even worth it. Don't hope. You either have a plan or you don't. So I'm optimistic we'll get there. I feel a little discouraged because of, for all intents and purposes, this piece right here shouldn't have happened, in my opinion, right? This yellow part here should not have happened. I did not think we were going to keep drifting lower. I thought that we would sell off a little bit and then start to take off maybe in February and see that next big leg to the upside. Now, I still have I think I have my line drawn on here. Or maybe I took it off. Yeah, for some reason that line got removed. I'm not sure why. Let me see if it's on the Bitcoin price chart itself. I do think that there's definitely a good chance. I'm still very optimistic that we will get to 250K. Yeah, I don't know where my line went. I used to have a line on one of these charts that had, I'll put it on I'll put it on this one here. So let's go from this low and say, okay, we hit this low here on April 9th. Where is 250,000 by the end of the year, right? Oh, so there's the vertical line. And that's going to be by November. So that means that Bitcoin would have to rally 239% by the end of the year. 239% in 222 days. Think we can do it? Hold on. Let me just type it in the chat. I'm going to start a poll. Can BTC rally 239% in... Yes, no. I'm going to add one more option on here, guys, which is... There you go. There's your poll. So, that's a long way away. And I think for most markets, you go 239% in 222 days. No way, right? This is way too much. Remember, we're dealing with something that has unique characteristics that are very different than every other asset class that you know. For example, I could say, oh, could NVIDIA rally 239% in the next 222 days? It could, but they can also manipulate their supply. They can issue new shares. They can do all types of things to manipulate their price action. They can do share buybacks too, which would push it to the upside. If you look at Bitcoin, it's a factor of its demand and supply equation, which drives everything. In my opinion, based exclusively off supply and demand equation, I have no doubt that Bitcoin will hit 250,000 this year. The challenge is this fractional reserve lending that's going on the part of the exchanges. That changes the number, that influences supply. It doesn't modify demand at all. It augments supply and increases the amount of Bitcoin theoretically in circulation, which to me changes the math behind Bitcoin. And that I'm a little concerned with. That I don't like. John says 180. How much is one Satoshi? Well, that's pretty easy. We can bring it up over here. So one Satoshi, which is the smallest amount of Bitcoin possible, is 1, 2, 3, 4, 5, 6, 7, 8 zeros and a 1, 7 zeros and a 1. So that's one Satoshi. And if you times that by current price, which will say 94,000. Oops. I messed up. It's 1, 2, 3, 4, 5, 6, 7, 1. And we times that by 94,000. This is the smallest amount of Bitcoin that you can buy. One Satoshi is 0.0009 cents. That's it. The 9/100ths of a penny. So there you go. That's how small a Satoshi is. That's the smallest increment that you can buy for now. Did Saylor check with the SEC before doing his fake buying on Bitcoin? Well, we don't know whether he did fake buying, Margaret. Remember, he could be going straight to Coinbase and saying, hey, I would like to buy 50,000 Bitcoin. And Coinbase is the one that's doing the fake stuff. They're saying, sure, here you go. And Michael Saylor looks at his account, just like all of you look at your account for your E-Trade or Schwab or Bank of America, and you say, okay, it's in my account. I see it there. That doesn't mean it's in your account, right? That's just a ledger entry. So I don't think that Saylor did anything wrong here. Saylor disclosed to the SEC that he owns this. He's paid for it. So in principle, Saylor's above and beyond what he's supposed to be doing. If he was smart, he would take it off exchange, and then we'd see, in my opinion, all hell break loose. That would be crazy. Steven says, if it wasn't for the fractional lending, it would be over 150 already, in my opinion. I could almost guarantee it would be, Steven. There's no way you can have the amount of demand that we've had. I mentioned this before, and I sound like a broken record, but there's no way you can have all of those positive rule changes, right? And really, when did it all change? I'll put a vertical line here. It was November 5th, right there. Big yellow vertical line is when all the administration changes happened. From the SEC to the Treasury to the President, the VP, all of that changed, and our House and Senate became very pro-crypto. How do we have that kind of change and adoption in front of us and price us off? In my opinion, the only way that can happen is if there's excess supply pushing down, because demand is there. Demand is absolutely there. Why does Saylor take that kind of risk? Saylor's in a little bit of a different boat than you and I. Part of the reason I think these exchanges can stay in business is people like Michael Saylor. When he makes a transaction, he's paying them millions in fees, right? He's paying a significant amount in fees. So why is he taking, so here, if I understand you correctly, what you're asking is, why is he taking the risk of keeping his Bitcoin on an exchange, right? Easier, maybe better to do from a regulatory perspective. Maybe I don't know the rules, but maybe the SEC kind of frowns upon that of self-custody, right? The SEC may not like that, because what does that represent to you and me? Let's just say hypothetically, Michael Saylor has 538,000 Bitcoin on a ledger storage device like this, right? He's got it on a little thumb drive. If that's the case, and you guys just type in yes or no. If Michael Saylor had 538,000 Bitcoin on one ledger, could he just disappear with all that money? Could he literally just disappear and never be seen again with all that money? Yes or no? If one person has the private keys to this device, he could disappear. Absolutely disappear. Gone. There were stories about years ago, it was the Enron CEO, I think it was the Enron CEO, stole something like $500 million, and then he just died. And there was no real confirmed autopsy of this guy. They didn't do an autopsy. So there are people who believe that he took that $500 million and did facial reconstructive surgery and is now living on an island somewhere. Who knows if you buy that conspiracy theory. But he could. Not possible. He absolutely could. If anybody has this on one drive and they have the private key, they can take it anywhere they want. And literally he could just put it around his neck and go to a beach in Thailand and become a ladyboy in Thailand and no one would ever know. And he's got billions and billions of dollars. It could absolutely happen. Now, will it? I don't know. But I think the SEC might look at that as a risk, and maybe self-custody is frowned upon. Anyway, let me wrap up here real quick and let you know what we got cooking for tomorrow. See if I can kill this here in 2 minutes. I didn't realize I just went long-winded today. For your Wednesday session, we have a lot of manufacturing and services numbers coming out for Europe. That's France, Germany, the EU, the UK, and for the US. That was today. Sorry, this is Wednesday. I'm like, what day are we at today? That was today. Those numbers did not look good for the US, by the way. If you look at the manufacturing and services PMI, yeah, they're above 50, but there's no improvement. It's just looking weak, especially with services. Okay, I'm talking Thursday for tomorrow. Thursday, existing home sales is your biggest piece for the U.S. You got durable goods orders as well and unemployment claims. They always highlight unemployment claims as red here. I'm not worried about that. I don't think the unemployment claims is that big of a deal. It's the unemployment number that is the much bigger one, and that will be next week, so we'll keep our eye on that. As far as the earnings go, let me bring up your earnings calendar so I can wrap that up. We do have some big names coming out with earnings tomorrow, so I want to make sure. I should have had that all ready for you, but I'm slacking. For mañana, here is your list. Intel, Google, or Alphabet, Bristol Myers Squibb, Gilead Pharmaceuticals, or Sciences, Merck, Procter Gamble. You got Valero Energy, American Airlines, PG&E, PepsiCo, Comcast, Nokia, Union Pacific. It is a bevy, big ones, big numbers tomorrow. So Google will be the most interesting one. That will, of course, be your popcorn trade of the day after market hours. And, of course, we'll talk about that on tomorrow's show. So that, my friends, will do it for today. If you have any comments, questions, feedback, you can email me at the email on the screen, which is tradermerlin@gmail.com, or down below any of the YouTube videos. I will see you all tomorrow. Take care, everybody.